Welcome back to Growing Quality. My name's Adrian, and SoFi is back at it. The stock is now up almost 20% in about a week, and we have to ask, where is this coming from? Because from the last period, the stock has just been trending down and down and down, and all of a sudden, it's shooting up. Now, in my opinion, we can take this back to one interview, which can then be separated into two main reasons. And, well, let's just find out what that is. Because, now, first, one asked about the economy. Anthony Noto mentioned that the economy pivots around two things: the state of the consumer and where credit is going. That's one reason, or one thing the current economy circles around. And the second being what happens with interest rates. Are they going to be cut, or are they going to continue as they are? And I think this is true. I think these two things go kind of hand in hand, but I think there's a truth in this. Because with the state of the consumer, that determines how much people are spending. If the state of the consumer is bad and we are in a consumer recession, then of course interest rates are going to be cut incredibly fast. However, this is not what you want. You want interest rates to be cut out of luxury, not out of necessity. You want them to be cut because the Fed can do so, not because they must do so. And that's another thing. If the interest rates get cut, then, well, when it's out of luxury, that's also good for the consumer. But these are the two things that keep economists, analysts really busy, and these are the questions they ask. Can we cut interest rates out of luxury or out of necessity? How is the state of the consumer? And how is credit? How is, for example, the delinquency rate on credit cards? Now, I think Anthony Noto is quite right about these two things the economy pivots around at this moment. And, well, let's see what else he had to say. Because after mentioning how Anthony Noto sees the economy and that it pivots around these two things, he added to it that SoFi ended the year with 26% revenue growth, and doing so with no growth in the lending business. Now, I will show you this in a second, but he also added to it that SoFi is really pleased with how things went since then. And with since then, he refers to since last earnings report. Because, well, let me show you. I highlighted it already. During Q1 2024, SoFi had 325 million in lending revenue. In Q1 2023, so the year prior, SoFi also had $325 million in lending revenue. Now, as you saw, that's where the 26% growth came from, but with no growth in lending. So by saying that he's really pleased with how things have been going since then, he means that since the end of Q1 2024, and he means about the lending business. Because, well, you saw it, that's flat year over year. And as this was flat year over year, he also said that they have been investing a lot into their other products, like SoFi Money, the technology platform, for example. So they have been focusing on growing that. Now, more comments about that later, but let's first look at what else he had to say. Because when Anthony Noto was asked about student loans, he said that the view was for 5 or 6 rate cuts. And we believe that for that to happen, there will be a recession or an underlying problem. Now, this is of course also what I have been referring to. If you would see 5 or 6 rate cuts, that would mean that it would be out of necessity. You would have to, well, that would be a must for rate cuts. They have to happen because out of necessity, and that's not good. That will mean either a recession because of, well, for example, jobless claims just shooting upwards, or because of deflation. Because 5 or 6 rate cuts in such a short period of time, that's not something that happens naturally. Then something must go wrong. And that's not what you want. So what else did Anthony Noto say about the student loans? Is that they have focused on people with private loans. Now, why is this important? Well, that's basically because those private student loans are less vulnerable towards changes in policies from student debt cancellations, repay them, don't repay them, have a break in payments. They are less, well, volatile, so to say, for those parts. That's what Anthony Noto said. And I mean, it makes sense. So then finally, Anthony Noto added, we have done really well in a high rate environment and are really excited about what will happen when rates go down, because then you will see a real pickup in refinancing. And well, this just makes sense because basically loans get cheaper. So doing refinances or doing refinancing makes more sense. It doesn't make sense to refinance your 6% loan. I'm just throwing a number out there for 5.5%. Well, if it gets under 5%, then it becomes way more attractive. But for this to happen, the rate cuts have to start first. And that will also pick up the lending business. So, what did Anthony Noto finally say? He said that with the positioning from the market for 5 or 6 rate cuts, they took a really cautious stand. Because if that would be true, well, like I just said, he believed that there would be a big underlying problem in the market. And the 5 or 6 rate cuts would be the least of your problem at that time. That will mean that the economy is breaking and, well, the issues are completely somewhere else. So SoFi took the stand of 2 to 3 rate cuts, went cautious, and said, we'll see what happens. They didn't go aggressive on the lending side of the business. They instead focused on investing on the other parts of the business. And, well, now they are benefiting from it because now they are positioned in a very good place. And as Nodo already said, they are excited to push with basically both sides of the business for growth going into 2025. Now, this interview may have sparked some other things because in a few weeks, I believe 30th of July, we will see earnings from SoFi. And, well, if he mentioned that he's really excited about what he's seeing, then I think it will be good. Now, as we can see from the most left column, we are seeing the current quarter of June 2024. And there are 15 analysts covering this quarter, and they have an average estimate of, well, 1 cent of EPS. For the upcoming quarter, so that will be released in September 2024, they are estimating 3 cents of EPS, and for the full year, they are expecting 9 cents of EPS. Now, the high estimate for this quarter is 2 cents. And if I see the comments and I combine this with the earnings history of SoFi, and keeping in mind that I for sure haven't seen any really strange things with the business, I suspect that they might do well. Because if we look at the expectations, this is from TradingView, we can see that in Q4 2024, they are expecting 1 cent, and that is on the top line. And if we look at the bottom line, or vice versa on the balance sheet, but on this picture, we can see what I have circled, around $565 million of revenue expected. Now, the maybe crazy part about this is that it's 15.5% growth from last year. However, it would mean that they are pulling back on revenues compared to last year. And if we look at 2023, this wasn't the case. So that's something notable to keep in mind. They are expecting quarter over quarter revenues to shrink a bit, but they do have a history of outperforming or beating estimates. If we look at the revenues, we can see that it's around 3 to 4% each quarter. And if we look at the EPS numbers, it's been volatile, but they have definitely outperformed. So with that in mind, I think that we might have found a reason for SoFi to jump 20% this last week. We see a lot of enthusiasm for smaller caps because of the rate cut narrative. It's getting there. It's coming. People are sensing it. And if it's really coming, well, that remains to be seen. But we are definitely seeing strength in the Russell and in small caps. So So let me know what you think about it. Is it just because of the rate cut narrative about the rotation or enthusiasm into small caps? Or is it about this interview, what it might mean for earnings and what it might mean for future earnings? I hope to see your comments with your opinion about it. And if you've liked this video, please remember to like and subscribe to my channel. And I hope to see you in my next video.